Good morning, everybody, and this is the DAX setup for today. So, yeah, what we expected happened didn't happen, but that's another reason why you stay out of the market when this kind of nonsense starts carrying on. So, first things first, let's just there's three levels we need to pay attention to at the moment. I just want to get them all in, and we'll give you the actual levels when we get down to lower time frames. But for all intents and purposes, on the 8 hour, we are ranging. Oscillators have eased off, but look how they've separated. So we had a pretty strong move yesterday, which was against what I was looking at. But it just goes to show you, the trend is strong. So the higher probability trade is to go with the trend and buy every dip. Problem that you have is that you're in a range, but still, everything here, even though there was bearish setups and bullish setups yesterday across all the markets, you can see the markets just continued trying to prop themselves up and held onto their lofty highs. So nothing really we can read into the 8 hour. 3 hours pretty much the same. Big up, big down, big up, big down. So the theme of last week continues. Last week, big up, big down, big up. And then we started off the week with big down, then big up again. So if you look at the oscillators now, we've gone from separated down to on the downside to grouping to the upside and starting to separate as well. So I suspect we're probably going to have some form of a move back to the downside. Now is bits and pieces of structure in amongst this range, but so messy that I'm pretty reluctant to pay attention to it. So you see what I mean here. Every single tail, I mean, there's a nice juicy tail as well. If you go further down, there's another one there. Then these tails to the downside, all would be levels that are in play. I just want to put one more in. And you look left, that looks like a fairly strong area of support, and there was quite a bit of interaction with it yesterday. Now, this is barbed wire, tails to the downside, tails to the upside, complete confusion here. This was just going into the close, I think. Yeah, so that was just before the close, and then we just went sideways after the cash market closed. So futures market at the moment, we're waiting. I mean, there's nothing else to read into this. We are ranging, we are waiting, we're waiting for the Feds. The Feds are going to have their song and dance tonight. And obviously what we're trying to ascertain is when are the rate cuts being scheduled. So kind of difficult because all the data that was coming out last week was not really positive to any rate cuts at the moment. But you never know. Markets are forward thinking and forward looking. So what we're looking for is just any sign that we have a peg in the ground. So if good old Jerome comes out and says the peg in the ground is, let's say, November or even December, then you will see the market rally. If he comes out and says the peg in the ground is next year sometime, you should see a bit of a fall and then a continuation. If he comes out still confused, as he is at the moment, you'll probably see a big slip to the bottom of the range and then digest that data and then start moving back to the upside. So for me, this is still a very clear sit on your hands. So just have a look at what happened yesterday. You had pretty much sideways. What we're looking for was a rejection of a level. There were multiple levels that we looked at yesterday in this area. We broke through them, broke back down, broke up, broke back down. Not paying attention to the 150 EMA. Not really paying attention to structure from the day before. You can see this has been a key area for me, which was 1800. We did speak about it yesterday as well. But look at how we just bounced above, bounced below, bounced above, bounced below. And instead, we drifted down to a level which was basically created after hours. So you can see there it was created after hours, there it was created after hours. And that's pretty much where we had a fairly decent inside bar. Moving averages all crossed over, oscillators separated and moving to the upside with a little bit of diversions if you look between there. So every signal here was, as soon as you saw that, that's a long, only a 30-point stop loss, and you probably would have been in for 50, 60 points, so 2-to-1 trade. Not something that I would have been looking for. So for today, I'm just going to zoom back out to the hour. We are ranging. I have zero interest in jumping in long up here, zero interest at all. The only time that I would start looking at longs at these lofty levels is once we've broken through them and come back to test. So in other words, I can take it from there. I'd need to see us get above 18,091, move up, turn around, come back and test this, and then start rolling. That would be my long entry at these levels. For now, this is a range, and I will sit tight. You have no idea what's going to happen this afternoon or this evening for us sitting in European time zones. So the safer bet is just to wait. I know it's always, it's 3 days every month that you typically have to wait, but when the market is moving and there's structure in from the Feds, then this kind of stuff doesn't happen. Then it just continues. But when we're waiting, when everything hinges on the Feds, then this is typically what happens. So unfortunately, you're right, those 3 days off. Sometimes you see something, you can do a quick scalp or something. I mean, I was looking for a short scalp here, to be honest, and that never materialized. So that's kind of my song and dance for this morning. It's really just sit back, wait until this range breaks one way or the other. If it breaks the upside, wait for the pullback, then you're looking for a move to the upside. If the data is negative, I wouldn't trade that. I wouldn't trade this market tonight anyway. I'd just leave it and look at it tomorrow. But if you break this to the downside, come back and test the bottom of this range at 17,926, then I would be looking for a move to the downside. So for now, range bound, dangerous, above and below the moving averages, not something you want to get yourself tied into, and especially when you see this kind of movement. And if I just do this on the 5-minute, you're probably going to see even worse of a up and down. I mean, that's confusion. You can see very strong move to the upside, and there's an even better trade there. So 20-point stop loss, 40-point, that's 2-to-1 trade. But then you can see big down, big up, big down, gaps everywhere. There's even an open gap. There's 2 open gaps to the downside, 3 open gaps here to the downside from yesterday alone. And I think there should be more. There's quite a few there. I know there are a couple to the left as well, but I'm not going to go there. Anyway, that's kind of my view today. It's still the same as yesterday. Sorry about that, but rather keep yourself safe than trying to second guess this. And when markets move up and down like this, and you're in on a trade because you have to trade, or you feel you have to trade, then you start losing money. Sometimes you just wait it out. A couple of days, you will make whatever money you would have made anyway, plus extra, as soon as you get onto the trend. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.